Pat Dorsey, one stock you like is Cisco. That company is cranking out the cash. Does John Chambers have the magic back?
Well, he's at least found out where the clue train is boarding. I'm not quite sure he's gotten on yet. The return of capital to shareholders over the past year has been good. Acquisitions have slowed down. Not a big fan of the recent buy of that set-top box software company. But they seem to be realizing that their core competency is in routers, is in switches, and it's not in commodity set-top boxes. So the company's moving a little more slowly than I would like, but at a 10% free cash flow yield, I can wait a little.
You also like Express Scripts. Now, with all the talk about Obamacare, you sure you want to get into this business now?
I do, and the reason, there are couple reasons. One, it looks like their purchase of Medco is going to go through, and the cost synergies of this, which will make them the largest pharmacy benefit manager by far, are enormous, and I don't think that's factored into the price. Secondly, they're really not very exposed to reimbursement risk. The more volume of drugs that go through the system, the more they benefit. And they also benefit from generics because PBMs make more margin off generics than they do off prescription drugs. And so any pushes towards cost cutting, encouraging patients to use generics, that actually makes Express Scripts more money while it saves the system money.
You also like AmeriGas, which is in the propane business. Now, are you expecting a whole lot of barbecues this summer? Is that why?
Exactly. Propane distribution. So, a lot of folks in rural areas, not really here in lower Manhattan, have a propane tank buried in their backyard where that, heats their home and, their cooking gas. And what happens is the distributor actually owns that. So that switching providers is very, very difficult, which enables AmeriGas to raise prices pretty nicely every year. This is a master limited partnership. It yields about 7.5, 7.7 right now. We had a pretty warm winter, in case you haven't noticed. So EBITDA has taken a hit recently, and they also closed a big acquisition. Both those things have really weighed on results, but last time I checked, winter's pretty mean reverting. So I think you're going to collect a nice 7.7% yield that's going to grow at about 3% per year. And next winter, when we're shoveling snow, you'll be pretty happy. All
right, those are your buys. On the sell side, you don't like the utilities. Utilities had a great run in 2011. They sold off at the beginning of 2012. Is it just over? Just too pricey now?
Just too pricey. That's exactly right. I mean, this was a sector that got very, very cheap a few years ago. We bought a lot for our clients. People have made money. But right now, when you're paying 15, 16 times earnings, above market multiple, for businesses growing at 3% per year, I'm afraid I really can't get excited about that because what you want in a dividend-paying stock is a company that can raise that dividend every year. A 4% yield with 1% growth doesn't get me excited.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to